Hey everybody, welcome into the show today. Today we're going to be talking about the 5 big real estate investing mistakes that are costing you money, and then we'll open it up for Q&A. I'd like to welcome everyone in first. So we'll get the show started in just a few moments here as people pop on the live stream and these alerts get sent out from the old YouTubes. Hope everyone is doing well. Let me know where you're joining us from today. And how many of you, I'm curious where you are in your real estate investing journey right now. Let me know. How many of you have one property, multiple properties, or just looking to get started in real estate investing? I believe, as I always say, it's the number one way to build wealth and preserve wealth long term as a hedge against inflation. Good to see everybody popping in here. Pollock's World of Entertainment, nice to see you. Pittsburgh. See you. Let's see, what's the 13th? So I got my Pittsburgh Snuggie that Grover's sitting on. So he made me think of Pittsburgh. Yes, I do have a Snuggie. Okay. Yeah, we're going to start here in a few moments. Just like to always welcome everyone in first because YouTube sends out alerts later and takes a while. And by the time you get alerts, people come on and say, oh, what did I miss? So I'd like to give everyone a chance to kind of pop on first. Today on the show, we're going to be talking about 5 big real estate investing mistakes that cost money, that are costing you money if you're not paying attention to it. So we will talk about that. Tony says, I'm just starting. Okay, good. You're just starting in the world. Hey, Bill is here. Good to see Bill Purdue. Nick says, I have no properties yet, all crypto. And remember, real estate investing is, to me, it's the best way to preserve your wealth. Because it's, not only a hedge against inflation, you get, of course, the tax benefits of this, but it's a tangible asset as well. And for 4,000 years, it's been used as a way to preserve wealth. And so to be able to take some of that crypto money and converting that into buy and hold real estate that's producing cash flow for you. That's certainly the thing with crypto is that it's not producing cash flow for you, right? Sure, if you're taking profits out, but then you're also paying capital gains taxes on that as well. So with real estate, you're able to produce monthly cash flow, and if you're structured properly as a real estate professional, you're in an entirely other tax bracket. There's nothing like it. There's absolutely nothing like it. Nick, way to go. That's the plan. I know Grover is getting so big, but he's not growing anymore. That's as big as he'll get. Little golden nugget. All right. So we're going to start here in just a moment. Just want to let everyone welcome in. Go ahead and smash the old like button if you'd be so kind. Yes, God's money. As Lindsay said, there's people's money, crypto, government money, fiat currency, and there's God's money, which is gold, real estate, land. It's not going anywhere. All right. You were in Lubbock last week. That's awesome. Did you meet the team? Hope you said hi to our great team. Scott George is here. Good to see you, Scott. Michael Olson is here. You did? That's great. I literally have a house closing that I have to sign for. You're going to the notary? Or that you're done? Oh, okay. Literally, this is a real estate transaction. Natalie, say hi.
Hello.
Right here? Or no?
Under mine.
Okay. That's it? Okay.
Give me my pen.
That's your pen. Okay. Real estate in action. Hola, Jacob. My neck is cracking. That's what you're asking. I've had this sore neck for like a month now. A month and a half. It's been killing me. That's what's cracking. All right. Shall we get started here? All right, let's do it. So get in your questions. Turn this away. All right, let's get started. Welcome into the Real Estate Investing Show. I'm Clayton Morris. So glad to have you here. Today, I want to talk about 5 big real estate investing mistakes that are costing you money. You might not even be aware that you're making these mistakes. So we're going to talk about that on the show. If you're new to the program, welcome. We talk about real estate investing on this channel, helping you become a more intelligent real estate investor. That is my goal, helping you avoid some of the mistakes, pitfalls, and things that I've made over the years to help you accelerate your portfolio to making you a more savvy real estate investor. My name is Clayton Morris. I'm the founder of Morris Invest, which is a full-service rental real estate company beyond turnkey. We've really grown beyond that with full service, full customer service from start to finish and helping people get started in real estate investing. And this year we're building, a goal is close to 400 homes this year. And so a lot of the people who are buying homes right now are getting great financing options. And interest rates are incredibly low. So that's really the first out of financing on certain properties built in, which means that the bank that we've partnered with, first of all, has vetted the particular market because it's in a really good market. And they know the demographics are consistent and great for that particular market. And so they know that that asset is going to perform at a very long, consistent level for that bank. And it's going to continue to perform for years to come with a tenant in place. Just making sure our stream is up and running. Is it good? Okay, it's good. Sorry, it looks like we had a problem. For a second, I had a little hiccup on my... It froze for me, I guess. Okay. Anyway, let me scratch that part. So Non-recourse financing. This is obviously a fantastic option for people looking to if they have maybe a credit issue, they live internationally. The bank itself has provided non-recourse financing on the asset itself, not even you, the person. They care more about the asset. And so it's non-recourse. It's not even tied to your own name. So maybe you have poor credit or credit's not fantastic. It doesn't matter to this particular bank because the bank has already vetted the property. They've seen the construction phase. They're in a demographic market where they also will put their money up against as well. So they're supporting this particular market. They've seen the job growth. They've seen the Fortune 500 companies moving in. They've seen the rental rates in this particular market. They've seen the vacancy rates. They know it's a good rental market. And then furthermore, they've watched the house being built, et cetera. So that's non-recourse financing is not tied to you personally. I know a lot of people, they don't even get involved in real estate investing and they make a huge mistake and they're losing money because they don't know that these other financing options are out there. And then on top of it, let's talk about traditional financing right now. I mean, traditional financing at this record low interest rates right now. And the Federal Reserve, of course, has told us, Jerome Powell, even in a 60 Minutes interview just the other night, said that they don't expect raising interest rates for at least more than a year based on inflation. Now we're seeing inflation is ticking up a little bit. So they are going to let that inflation hover around 2%, but they're not going to raise rates until they see the effect of the inflation. And he said, I don't see us doing it for at least another year. So maybe 2022, 2023, nearly 0% interest rates right now. The reason I say 0% interest rates because it's about 2%. But if you think about the rate of inflation and you think about the rate of appreciation on a rental property, it is exceeding this. So it's basically a 0% interest rate right now. With the appreciation of the properties that we do, I mean, we're looking at very conservatively 2, 3, 4% appreciation. So you're beating the inflation number and you're beating the interest rate number. That is powerful. And most people don't even know that these financing options are available for them for an investment property. So please do your homework on what types of lenders. I mean, we work with like 60 different lenders. So there's not a one size fits all approach. Like I know we're going to talk to different lenders, find the right fit for each particular buyer. And you should be able to do your homework and seek out the lenders that you want to work with. There's many, many options out there for real estate investing. Don't let the fact that you haven't done homework on financing get in the way of taking action. Number 2 on my list, buying in the wrong markets. This is another huge mistake that people make, buying in the wrong markets. This one can make or break you. You know, if you're looking for real estate investing in the wrong markets, you might as well quit while you're ahead. It's important to do serious market research. And in this climate right now, it is essential to invest in markets that are recession proof or at the very least recession resistant. I want you to watch my video that I did on the 10 things that we look for in a real estate market and how to recession proof your investment portfolio. I'll give you a few of those tips right now here. I'll sort of give you the truncated version, if you will. But number 1, I want to make sure that the vacancy rate is low. We are in one of the best, biggest rental market booms in American history, right? We need a massive amount of rental property. So if you're in a town, an area where literally the vacancy rate is high, something's wrong. We have 20 million affordable homes that we need in the United States. 20 million. So if you're in a town that has a high vacancy rate, chances are that's not a good area to invest, okay? Like high crime, another big issue. I don't want to be in an area where there's high crime. What are the school districts like? You know, all of the new construction properties we're building are in the best school districts on purpose. That means tenants will pay more and stay way longer because now their kids are in the best school. So that makes sense to be in those particular areas. If you're going into an area that's kind of sketchy, schools aren't good, there's a lot of transitory living. People are there for a short amount of time. There's declining population numbers. This is a very important point as well. If people are migrating out of that city, leaving that city, why would you invest in that city? We saw that happening in Michigan. People leaving that area because of different laws and regulations and taxes, etc. Lack of jobs. That was just another big piece. People leave because of a lack of jobs, and that's when crime goes up. So are there jobs? Are there good paying jobs? We want to be in areas like where we build our properties where there's multiple Fortune 500 companies, but very important, a diversity of these companies. So hospitals, universities, school systems, healthcare, automobile, auto manufacturing, etc. So they're not, they're not the one is not hurting the other. If one has a problem, oil industry or something, it's not hurting the other. Like in West Texas, for instance, where people think, oh, it's oil, but that's not the case. Healthcare, universities, hospitals, all of those things, very, very different and very diverse. So if one of those particulars has an issue, there's always another industry right there. You don't want to be in a one-horse town where there's just one oil refinery. There's, one super Walmart. It goes out of business. I remember Bluefield, West Virginia, an area I used to live in, southern West Virginia, and a super Walmart came to town, and every business was basically put out of business. Every one of them. All the little shops on Main Street, downtown Bluefield, put out of business. Now, what happens? Now, all of those businesses are now gone. What happens if this one super Walmart decides to uproot and leave? Ghost town. Ghost town. Imagine if your tenants work for that super Walmart, out of a job. So very important to know your markets. Third thing on my list, 5 things that really hurting real estate investors and big mistakes that are costing you money. Number 3 on my list is forgetting about tax planning. Okay, tax planning is very different than just filing your taxes. Some of the biggest benefits available to investors are in the U.S. tax code. And I get so many messages from investors asking when they should hire tax help. And the answer is yesterday. We have a tab on our website devoted to it. If you go to morrisinvest.com/lower taxes, it's right there on our website because we believe in it that much. That real estate at the top of our website is very important. So if we devote a whole tab to making sure that people are lowering their taxes and being smart with their tax planning, it's very important. And it's a year-round responsibility. I get so frustrated when I hear people say, I'm hoping, I get a big refund this year. I'm hoping. I don't want to get a refund at all. I want 0. That means I'm not giving the government any money, but I'm also not getting money back from the government. Now they've held that money in its form of an interest-free loan that I've just given to the government for 6 months, 8 months. They've made money off of my money. That means you weren't planning correctly. I want 0 back. I don't want to pay any taxes. And I don't want to receive anything back. That's tax planning. So I'm a huge fan of the team at Wealthability. We have a special link on our website that we've partnered with them 3 years ago now. And they set up a program just for our investors, just for Morris Invest investors, who they literally built a team just to help our clients. So if you go to our website, there's a lower your taxes tab on the website. You can check them out. And book, you jump on a free call with them and see if they're a fit for you, but they're fantastic. So that tax planning happens all year long. You should be having regular check-ins with your tax team so that you're not missing anything. And then filing the taxes is the easy part. As our tax advisor, Tom Wheelwright, likes to say, the filing of the taxes is the easy part. The hard work is all year round when you're planning your taxes. How do I, am I going to use a 1031 exchange? Am I going to use this cost segregation analysis to lower my overall taxes? All of that is done ahead of time. And then the filing of the taxes is just the paperwork. Critical as a real estate investor. Critical. The tax code is written for real estate investors. So please take advantage of it. Number 4 on my list is not running the numbers properly or understanding what they mean when you're buying a rental property. So often I meet investors who, when they bought their first rental property, they didn't understand that all of the hidden things that were there that were digging into their return on investment. They didn't realize the property taxes were that. They didn't realize that there was a homeowners association. They didn't realize that this hidden fee was built into this. Returns are everything when it comes to real estate investing. Everything. So it's very, very important that you pay attention to those numbers at the beginning. A lot of things in life are not black and white, but this is a good deal is a good deal. A bad deal is a bad deal. There's no in between. Have you ever heard the phrase, that real estate investing, the profits are made on the purchase? It's always the case. You can't like massage it later, okay? It's always made on the purchase. So we go into great detail at our company on what's called the internal rate of return, the IRR. We have a full video on this channel coming out soon. I want you to subscribe to our channel because we have a full video coming out soon here on IRR. And I'm going to show you, break down the numbers so you can understand all of the math and why it's essential that you understand this process so you know how to grab the best investment for you and your family. So IRR, understanding those numbers. And number 5 on my list of big mistakes that people are making in real estate investing and costing them a lot of money is trying to do it alone. Unless you're very experienced and highly talented, you're going to need a team. It's not as simple as just buying a house, putting it up for rent. Real estate investing has a lot of moving parts, and it's silly to think that you can do it all. Totally silly. You need support on this journey if this is going to be sustainable. I mean, I, for one, could not do my own taxes, okay? At one point, we finally said to my wife, I said, you cannot be the bookkeeper for our real estate journey anymore. You can't do it. You're not a good bookkeeper. You're okay. You're okay. And she recognized that. She's like, I'm not that good at it. I keep good spreadsheets, but I'm not that good at it. I'm missing things. I'm missing, expenses that I should have accounted for that would have saved us on taxes. I missed that. I didn't see that one. And I said, we had a discussion about it. And I said, well, okay, how much would we pay to hire a really mediocre kind of crappy bookkeeper? Like, what would we pay that person an hour? And basically my point was, we already have a crappy bookkeeper. So why would we pay, like, how much are you worth? You're worth way more than that. You should not be spending your time on something you're not good at. You need a team. So we hired an excellent bookkeeping team that saved us a lot of money because they keep track of all of it. Same thing is true of the legal team. You have to get the best legal team. You need the best contractors, best materials, best property management team. All of those pieces are incredibly important to this journey if you want to be sustainable. You cannot do it yourself. You cannot. You just got to recognize your limitations and just turn it over to a team. Robert Kiyosaki wrote a book called More Important Than Money. And the point is, what is more important than money? It's having a team. It's more important than money. The money will follow. The team is way more important. So those are 5 things that are costing real estate investors a lot of money. If they don't understand how to navigate this world, it's going to cost you a lot of money. So please re-rack this, watch the 5 things over again. Drop me a comment below. I'd love to hear if any of these really resonated with you. All right, let's open it up for some Q&A today. Sorry, I got an itchy nose today. Let's see. Ethan had a small electrical fire this weekend. I'm sorry to hear that. I'm glad to hear it was under control. He says, yes, I screwed up this year because IRS still owes me my stimulus, so I'll look into this. Thanks, Clayton. Sure thing. Thanks, Jacob. Myra Ramirez, one of the bigger companies in the area, Caterpillar, apparently left the area recently. The tenants have been spotty in our case. Barely have had tenants since we bought the property. Yeah, we're focused on West Texas, but Tennessee is a great state. I mean, Tennessee has so many businesses moving there. Still, it's very favorable, just like in Texas. It's landlord friendly. It's business friendly. Low taxes. Yeah, Tennessee's a... let's see, Julian. Julian, that's a weird font. It's hard to see your name. Excuse me. I lose my voice. Says, I have 4 duplexes. Should I get home warranties to cover the appliances? I have 4 plexes. Should I get home warranties to cover the appliances? Those things, I look at I always want to know what those appliance warranties are. Very often, a lot of these appliances will have like 10-year warranties, manufacturer's warranties on them. So I would check your different manufacturers. Some of the higher end furnaces and so forth have like a 10-year. Oh, Nick, I just we visited there 8 years ago and just fell in love with it. Just so beautiful and inexpensive, safe. It's the 3rd safest in the world. So those are just a few of the reasons, and it's so close to getting back and forth to the East Coast. Ronnie says, how can you save on homeowners insurance? Is there a company you recommend using? Yes, we had a company on our show that Natalie and I ended up using, actually. What was it? Kelly, do you remember the link? I think it was... I'm not sure if I can remember now. Oh, I think we had it as, I think it's, here, I'll drop it in here. Morning Invest, I'll type it in here. morninginvest.com/policygenius. Might have to put the HTTPS, sorry. YouTube is funky like that. Morning /policygenius. There you go. Check that one out for homeowners insurance. They have all sorts of different, and they'll get you the best rates. Minetta Manoa says, my husband and I want to get into real estate. How can we? Well, Minetta, start with this channel. I mean, on this channel, I teach you the basics, and I think we can help you at every step of the way here. Yeah, that's a good place to start, Minetta. So go to Morris Invest. We've got our Freedom Number cheat sheet. We've also got our boot camp. It's a totally free boot camp. Download it for free. We'll drop a link here in the chat. So it's our 90-day financial empowerment boot camp. Takes you each week, week by week by week, on this journey. And it'll help anyone on different stages of their investing journey and just getting your finances in order, and really lays the foundation. And again, it's totally free. We put a lot of work into it. It's a download. It's like 30 pages or so, but we go through week to week, and you'll have some homework to do at each stage. Okay. But watch this channel. We teach you all of the basics and fundamentals of investing in real estate. Viab Gagrani, should we pay off our primary residence before investing in rental properties? I can't tell you what to do. I'm not a financial advisor, but I will tell you that with interest rates as low as they are right now, why? Just, if you're paying a mortgage and you can use the equity in your home. What I would want to know, though, is Viab, I'm not sure if I'm saying your name correctly. What I would want to know is, how can you use the equity in the home now that you live in, get a home equity line of credit, and take money out of that property and invest it in rental properties. So I'm going to give you an example. Let's say you have, let's say you live in a $200,000 home. Okay. You owe half left to the bank. You can get a home equity line of credit on that equity. Okay. So let's say you have $100,000 of equity. They'll give you 80% of that typically. So you'll get 80,000, because they don't give you a full 100%. They give you like 80% loan to value. So you get a home equity line for about 80,000. That's like 2 down payments on 2 different rental properties. And now you've got over $3,000 a month in cash flow from 2 rental properties that you used on the equity from your own home. I always say that you cannot eat equity. So if you're sitting on equity, use it. You know, I mean, what good is paying off that house if you're not going to use that equity position? Let's see. Anthony's asking about interested in multifamily. Yeah, that's what we do. We do singles and duplexes. So book a call with us, Anthony. Just go to morrisinvest.com and book a call with us. We'll help you with that. We have non-recourse financing, and we work with over 60 different lenders. So we can do, the thing is, there's not a one-size-fits-all approach with that. We can work with you individually to see, maybe we can get you traditional financing over here. We can combine that with funds you already have. It's like Lego pieces. I'm a big fan of duplexes. I mean, because our duplexes are very large. So tenants, they're almost like single families, and the tenants tend to stay a long time. New construction, brand new construction in the best school districts. Tenants aren't going anywhere. That would be in where we are in West Texas, one of the best rental markets in the country. Jacob, yeah, VA loans are only for primary residences. But here's the thing, Jacob. You can buy, if you have a VA loan, okay, you're a veteran or active military, you can get a VA loan, and you have to show that you intend, okay, this comes directly from my friends in the military on the real estate side, said you have to show intent to live in the property. So I'm going to live in this property. Life changes sometimes, right? But I don't want you to screw with the law, but just intend on moving into that duplex or intend on moving into that triplex. Move in, okay? It's your primary residence. You got with a VA loan, and now the other 2 units you rent out. That's a brilliant use of a VA loan. Don't buy a single family that's only you. Buy a multifamily with a VA loan and rent out the other units. That's how you can really snowball things if you're a veteran. Bill says, I started following Clayton and Natalie in 2017, and now I've gotten my first property with Morris Invest. It's doable. Watch the YouTube channel over and over as I did, and you will be amazed at what you can do. Thank you, Bill. That is the kindest thing I've heard. That made my day. Julian says, if I acquired the 4plexes 2 months ago, how soon can I pull money from the down payment to buy other properties? Do I have to add value? Well, 4plexes are residential property, as you know. Anything 4 units and under is residential. So it falls under residential real estate guidelines. You should be able to get, if there's equity in those properties, the bank, most banks will not care. I would not work with a bank that cares how long you've owned it to pull equity out of it. Okay. So shop around, look for some banks that are going to want to allow you to pull some equity out of those properties. If you have any equity in there. And if you don't, remember, you got 4plexes that are producing cash flow every month, putting that right towards your principal balance. You're probably, hopefully you're cash flowing at a good internal rate of return, paying down your mortgage, cash flowing, setting aside money for repairs and taxes, etc., but getting a really good IRR. That's the goal. Let's see. Jenny, what is a fair cap rate with these low interest rates? Is an 8 cap for a 4plex worth it? Cash flow is tight. There's a lot of I don't like to throw around numbers because on paper, anything can look good, but I want to see things in the real world. We have a video, Jenny, coming out real soon called On Internal Rate of Return and Understanding These Numbers. Most people focus on ROI, which is just a cash-on-cash return. But what I want to look at is internal rate of return. That is, how much am I getting? So normally someone might say, oh, a 7% cash on cash return would be good. But the internal rate of return is going to be like 19 or 20%, 18, 19, 20%. So I'm more interested in the internal rate of return because now I'm getting my principal balance paid down. Okay, I'm able to invest in real estate with somebody else's money, the bank. You should absolutely not be using all of your own money to invest in real estate, in my opinion. You should be using the bank's money. Okay, that's what we do. We try to really make sure that our clients hold on to as much as they can of their own money. These interest rates, they're giving money away for free right now. Okay, they're printing money like crazy. You should take advantage of it. It shouldn't just be that Wall Street gets to take advantage of this stuff. You should be able to take advantage of it. Not all these greedy guys on Wall Street. We should be able to have access to this. And these 0% interest rates are virtually zero, allow us to build wealth and buy single family duplexes and get a fantastic internal rate of return. So our video on IRR is coming out tomorrow night. So be sure to subscribe to the channel. How many of you are subscribed to the channel, by the way? Show of hands. Just smash that like button if you're subscribed to the channel. And then when you're subscribed, there's a little bell notification. You can turn on that little bell, and that'll let you know as soon as we publish a new video. We put a lot of work into these videos and for education. And so we have a video tomorrow coming out on internal rate of return and numbers. We go through a spreadsheet. We show you the numbers. I think it'll be really helpful. Ethan, how do we find the best school districts? Well, there's a lot that goes into that. Obviously, I forget the website off the top of my head. There's a main national website that gives you rating scores that we use, but there's a whole host of other things as well. When we don't just relying on a website. We are relying on test scores from the kids. So like where we are in West Texas, we're in some of the best school districts in West Texas. And so we have tenants waiting to move into the properties because they're that good. And we're specifically buying land where we're building our new construction properties in those school districts. For instance, I'll give you an example. My mom, I know my father just recently passed, and selling our childhood home and in Pennsylvania. And it's in a fantastic school district. It's a school district I grew up going to. And it's such a sought after school district that I knew, like, if we were going to list this property, I was like, Mom, you list it. Let's list it now and it went into a bidding war. I think it was 8 offers in the first day or second day or something like that. Ridiculous. Because school districts are so important. I mean, now we've seen it during this pandemic, right? I mean, so school districts are very, very important. I forget the name of the website though. There's one that does like national scoring of the different school districts, so you can see what rating they get. You also want to look at test scores of the kids. There's a thing about teachers as well that we use. And that's the thing about property taxes. One thing you need to remember when people are, the property taxes are going to be higher over here. Yeah, but when you're paying more in property taxes, guess what? Better school district, right? And so that's the trade-off. You're paying more in property taxes in some instances, but you're also getting fantastic school district, and that's very important. Marie Napoleon, how much down payment do we need for a duplex? That's a good question. Nicole, would we say, I would say book a call with us, Marie, if you're interested. Just go to morrisinvest.com. So we've got a few. Yeah, I mean, it's going to be about 25% down. But if we do non-recourse financing, it could be, 30% down. Higher amount down because it's non-recourse. It's considered a riskier loan for the bank because you're not on the hook for it. They're backing the property itself. Yeah, there's a wide range right now in prices. on our properties. So really, we're not going to be anything cheaper than like $100,000. That's going to be like our kind of our bottom on up in price. Depends on, we've got some lower cost duplexes that are going to be more for student housing near the university. So we don't have granite countertops in those. It's more of a durable play with like 3 bedrooms. Each of them have 3 bathrooms. That's great for student housing near like Texas Tech. Those things are always rented. But they don't have like the higher end finishes because student housing, you don't really need to have stainless steel appliances and granite countertops. Doesn't make sense. And then we have the more expensive plays as well. Have you guys watched our videos here on the channel? We have a bunch of walkthrough videos so you can see inside the vaulted ceilings and the beams. And I love that exposed beam look, with the high ceilings. So we do that in a lot of them. And because it's Texas, we have more space. So we have big space. Tenants stay a long time because the rooms are big. Has a nice backyard, all of that. Garage. Yeah, Anthony, if you want to take a look at our walkthrough videos, you can see a ton of them. Plus, if you're are you on our email list? Lindsay's asking, are you on our email list, Anthony? You can get on our email list by downloading our Freedom cheat sheet if you want, or our boot camp. So just go to morrisinvest.com/freedom, and that'll get you on our newsletter list. So you get access to our cheat sheet. You can get our Freedom cheat sheet, which is really powerful. It's like 3 pages. It'll help you figure out, it'll help you figure out your freedom number, quite honestly. What are your monthly expenses and all of that. But anyway, that'll get you, I think we send out weekly property info, and we show finished photos of some of our current projects and walkthrough videos and things like that. So yeah, if you want to check that out. Let's see. Can I buy single family homes, FHA, 5% down, but then change my mind? What will happen with the bank loan? Are you talking about as a veteran? Yeah, you have to show intent to live there, meaning like you get your power turned on in your name, cable turned on in your name, like you're moving into this property, okay? And then if you're there for a month and then suddenly, you're military, you get transferred, you have to leave, or you decide that's fine. You still have that VA loan on that property. It happens all the time. Kevin, what are my thoughts on Amarillo? Well, I don't have anything to announce yet about Amarillo, but I like it a lot. And our field team has been spending quite a bit of time there. Again, I don't have any projects that I can speak of at the moment, but I'm very bullish on West Texas. Very. And by the way, we're constantly analyzing markets. We're constantly looking at different markets. I told you last time on the show, we spent over a year analyzing one particular market up north, and there was some demographic data that we just did not feel right about, specifically population loss. And so that just didn't fit with our model. And we didn't pull the trigger, even though everything else was great. Everything else. The contracting team, all of it. But we just, in the end, decided not to because it just didn't make sense to. And because of the amount of volume we're able to do in other markets that are better, we said no. Anthony, yeah, close, yeah. Dr. Houghton, how do banks look at multiple purchases? Well, we have a portfolio program, doctor. In fact, we work with, I don't know if that's a screen name or if you are a doctor, but we actually work with a lot of medical professionals because you're too darn busy. And we are able to do all of that for you. So we have a portfolio program that we're able to do multiple properties at one time with financing as well. So And, debt to income ratio, again, there's no one size fits all. So we're able to mix and match different programs. So just because your debt to income may look a little, we're able to make things work with a whole variety of different pieces to come together. So if you want, feel free to book a call with our team. Christopher, I have an opportunity to buy land from a family member below market rate so I can avoid these bidding wars. How much does it cost to build a home? I have a household income of $125,000. Are you looking to buy the home to live in? Is this going to be a primary residence, or are you going to use this as a rental property? Oh, that's your screen name, Donald Ray. I'll call you Dr. Houghton. How about that? Christopher, so maybe you can answer that question. Are you going to live in that, or are you going to turn it into a rental property? Yeah, Sachin, as Lindsay pointed out, I did a video on that recently. Do I need an LLC for real estate investing? So go check that video out right here on the channel. Walks you through that whole question. And, to build a home on your own, it can be expensive. Look, I can only speak about like what we do because we're building 400 homes this year. We're able to lock in lumber prices below the surge in prices where they just went up 185%. So if you're just going, getting it from a wholesaler lumber, say, you're going to probably pay a lot. And it just depends on, are you able to get a good construction loan? I would talk to a local builder and find out if that's something you want to do. It's a lot. It's not going to be easy. Oh, you'll live in it. Okay. Yeah, then that's a different animal, I would talk to, home builders are incredibly busy right now. So all over the country. So I would talk to, just see if you can get an appointment with a home builder, give an idea of the size of the property you'd want to build. You'll need to go and find like what are the restrictions on the property. You'll probably need to do soil sample test and water tests and all of that stuff to make sure that you can build on it. You'll just need to talk. The best thing to do is, honestly, you're going to need an architect, and an architect will usually help you with all of that. A good architect. So they'll know, okay, we have to do these types of surveys. We'll have to do these types of soil sample tests with the state. Depends on the county. And then, speaking with the builder. So your architect will then work with your builder. And if you get a construction loan to build it with a bank, they do that all the time. So that's what you'll need to do is work with an architect, find a home builder that's reputable, and that also you can find a bank in your area, a local bank, that will do a construction loan. NC Lovely, what's the difference between a tax assessed value versus the current value of a home? Great question. Tax assessed value is just based on the county tax collector. And very often, it's not always the case, but for instance, when I was doing a lot of wholesaling of properties, I used to get so frustrated because in New Jersey, the tax assessed value, let's say the home was worth $700,000 in New Jersey, not uncommon at all. And the tax assessed value might be $450,000 on the tax card, okay? By the county, that's what the tax assessed value of that is. Don't ask me why. It's all different in all states. In Florida, so if I was trying to do comps and figure out comps on properties, it was so painful in New Jersey to do this because the tax assessed value was way off of what the actual market value of the house was. And in Florida, my friend, who was a pretty popular wholesaler and a friend of mine, His tax assessed value in Florida was spot on. It was the exact value of the home, like what you would list it for with a realtor. And it made it incredibly easy for him to find comparable numbers. He was able to look 3-bedroom, 2-bath. Oh, there's 3 of them that sold in this neighborhood. They all sold for $250,000. And me in Jersey, every house was different. Every house had some difference, and it made it incredibly frustrating to figure out values when I got started in real estate. So that's what that means. It's just tax assessed value doesn't mean anything for you really figuring out the value of the home. It's just you need to do comparables. The best thing to do is to find out what properties sold within a quarter mile of the home with the same square footage roughly and bedroom and bathroom count and the year it was built. That's it. That's all you need to figure out. Ronnie, how do you acquire more properties after having 10 properties? Great question. I mean, obviously you're talking about conventional financing where there's that limit, but that's the beauty of non-recourse financing that we use. So we have a lot of clients that have 10 properties and they want to go more. And we have non-recourse financing, which doesn't care about how many mortgages you already have. You're able to get financing without dealing with that. Mm-hmm. Derek Larson said, I've had a couple of conversations with your team and I'm moving forward with analyzing and investing in new properties. Great. Yeah, I think a couple other people, I think it's Shay is here. Just went to Texas and met our team. Anthony says, does Morris Invest educate, build, and assist with the building of the team and peripherals around real estate investing, like entity formation or having recommended associates for these things? Yes. Anthony, I'm not saying this because I own the company, but I'm saying we saw an opening in the market a few years ago. We said, how could we literally do what no one else is doing and be the best? And we just went absolutely crazy with customer service. Like, we're going to do everything. No one else is doing this. No one else even comes close to this. Not even close. So entity formation, holding your hand through the entire process, making sure that whatever financing options are available, we have it handled for you. Also then making sure that your investment is taken care of through the length of the time you own it. So regular check-ins with our customer support team, the property management teams that we work with are fantastic. And so we have that great relationship back and forth. You can come meet our team, anything you want. You can walk through our properties. So we do all of that. That's awesome. She just bought a single unit in Lubbock. Awesome. With our team. Way to go. Brian Scanlon says, what's the typical interest rate on investment property? I guess, it really depends on the lender and what rate you lock it in at, but you see the rates every day. I just looked at them this morning. 2.84%, 3 something percent. Shay, what did you get on yours? She just closed, so she just bought one with us. Hopefully I'm pronouncing your name right. And of course it depends on your personal credit score too, what is your, yeah, he just bought one. Yeah. So Shay, Yeah, he just bought one. What is your interest rate? Can you tell us? So Shay, you were just in Texas like a few weeks ago, right? And you met our team. I'm curious, what interest rate did you got? Non-recourse. Okay. Non-recourse loan. So again, not tied to his personal credit. So, not tied to his personal credit score. He's able to get this with non-recourse financing, not tied to him personally, with $45,000 down. So I know, a lot of people don't know about non-recourse financing. It's such a powerful, powerful tool. Especially, if maybe your credit's not great or you're international and you don't have an American entity set up. So there's a lot of things that can really help. Plus, it's just a great way to also go around that 10 limit, the FHA 10 limit. Brian says, I have a 840 credit score. The best that you've gotten is 3.75. Yeah, I mean, here's what I would do, Brian. If you were going to, work with our team would. We have, like I said, we have so many different lenders that we've had great relationships with for 20 years. So we work with them on that to get you the best rate. And yes, non-recourse does have. Wow. So he got a 5.5% rate on non-recourse. So the thing is, we've had these relationships with these banks, these non-recourse lenders for many years. And what's great about that is that if you try to go out and do a non-recourse loan on your own, it's very difficult to do because number one, they need to vet the neighborhood, the demographics, the house, the investment itself. Because remember, they're not putting their money in you; they're putting their money in the asset. And then number two, the rates are usually like 12%, 13%. Way higher. So 5.5%. That's great. Justin, it's not necessary. We just depends on which program you use to purchase, as Nicole just responded, Justin. So should Justin wants to know, should I start up an LLC prior to buying any properties? And it just depends on which program you use to purchase. And that's the thing too. As Nicole's pointing out, we just did a whole video on, do you need an LLC? Look, traditional banks for conventional financing don't like you to buy it in an LLC. So what you can do is buy it in your own name with conventional financing. And then after a short amount of time, you can transfer it to an LLC. There's ways to do that, which we go over in that video. But that's not necessary. I wouldn't jump on that. Jacob wants to know, what's their minimum credit score? Well, like for non-recourse, they don't care, right? But for, I think, is it 620? For conventional, 620, 680, or is it 680? I forget where anything like 680, even lower. I thought that they even adjusted down a little bit. Michael Chapman says, I have an old trailer on a property. I'm a veteran. I'd like to put a manufactured home on this property. What would you suggest, please? I've followed you since you had Grover as a puppy. Oh, thank you. Now look at him. Big chicken nugget. What would you suggest? You're saying you have an old trailer on a property. I'd like to put a manufactured home on this property. What would you suggest? I don't know, Michael. I don't know enough about like the manufactured home space. I mean, it is obviously treated as a vehicle, right? You have to register it with the DMV, I think, or the Department of Motor Vehicles. So it's not actually a house. I do know that. You might want to even consider just doing like a tiny home. In fact, they have like tiny home kits now for sale. Is it your intention to move it regularly, or just want to have a home that's going to stay there and sort of a permanent structure? You might find that it's just more beneficial for you to get a small, like prefab home that's not like a mobile home on that land. Do you own the land or do you rent the land? Do you lease the land? Because very often people have leased land. They don't actually own the land that the mobile home is on. So a mobile home park, manufactured home park, you won't own the land when you own the mobile home. So it's leased land. Oh, Frank, that's great. You scheduled a meeting with one of our team members. I'll ask your questions tomorrow. Wonderful. Yeah, Jacob. Well, that's great. If your credit score is well above that, that's awesome. Well, thank you, everyone. Hope you guys had fun on this hour talking real estate investing. I love talking real estate investing with like-minded people who want to, increase their wealth and take this amazing journey to build financial freedom. So again, go ahead and download our cheat sheet. It's totally free. Just go to morrisinvest.com/freedom. You can grab that. We also have our boot camp. So go to morrisinvest.com/bootcamp and get our 90-day totally free financial freedom boot camp that takes you through week by week the strategies and to build your financial chart your financial course to freedom. So thank you everyone for joining us today. Really love being able to hang out with you guys. We'll see you next week here on the show. Don't forget, tomorrow night we'll have our new video on internal rate of return. So please subscribe to the channel and turn on that little bell notification dingus. That's what I call it. Dingus. All right, everyone.